Let's take a look at our markets now. Markets in Asia were mixed at the close. Chinese stocks closed largely flat, weighed by persistent worries over a possible escalation in global trade tensions. Shares in Hong Kong were higher, with auto shares lifting markets. The Shanghai Composite Index ended a tad lower at 3,368 index points. The Hang Seng Index rose by 0.6% and Japan's Nikkei gained 0.6%. Following a nice pickup in US stocks on Monday, the tone was more subdued in Tuesday's trade. This as market players had to digest both positive and negative trade tariffs plans by the US administration, with policy uncertainty with April just around the corner. The Dow Jones Industrial Average ended the session almost flat, down 0.01%. The S&P 500 rose by 0.16%. While the Nasdaq Composite Index gained 0.46%. Looking at our local market now, we see that the all-share index is trading in positive territory. It's up 0.4% at 90,098 index points. The rand is trading at 18.22 against the US dollar, 19.68 vis-a-vis the euro, and 23.52 against the British pound. On the commodities front, we see that gold is trading at $3,022 an ounce, platinum at $965 an ounce, while Brent crude oil is trading at $73.44 a barrel. Let's have a conversation with Chantel Marks. She's the head of equity research at F&B Wealth and Investments. Thanks very much, Chantel, for joining us. So from where you're sitting, is there any clarity yet around what trade tariffs President Trump will likely implement come the 2nd of April?
There really is very little clarity. It changes from day to day and hour to hour. At the moment, the big focus is on possible tariffs on commodities like copper, for example, and that has sustained a much stronger copper price and generally stronger metal prices today. But we'll only know for certain on April 2nd. As you mentioned in your introduction as well, there's been kind of conflicting messaging and conflicting reports as well. One of the reasons why I think investors are feeling a little bit better around April 2nd and the introduction of tariffs is because the language that Trump is using has changed a little bit. So instead of saying that it's going to be the best day, he's kind of changed it to saying it's a best day. So it's difficult to say at this point in time whether or not market participants are just grasping at straws at the moment. What we do know is that it results in heightened uncertainty. It's probably going to sustain until the 2nd of April at least, and likely beyond that as well.
Yeah. So our local markets surpassed the 90,000 index points last week, but it also has now, seemingly. Do you get a feeling that we're going to be able to hold at these current levels? But given all the uncertainty, I suppose that really is a big question mark.
That's the thing. It is so difficult to make any sort of forecast at the moment in terms of market levels. What we can say is that the market doesn't look expensive. South African assets don't look expensive. The SA Inc. basket of shares certainly doesn't look expensive after a pullback at the start of this year so far. So there's good reason why these levels can be sustained and why the equity market can push even higher. But that volatility is going to probably remain a question mark for us, at least until we start getting a grip on some of the policy implementations and policy decisions that are being made in the US, if we ever get to that point.
So yesterday we heard from FNB, they're part of the stable that you represent, about consumer confidence, that it had plunged by 14 points further into negative territory. This is quite a concern for both the real economy as well as markets, I suppose.
Absolutely. I think one of the reasons why we were quite positive and the market generally and economists generally were quite positive on economic growth this year was that we saw a really nice improvement in consumer confidence following the election last year and the instatement of the government of national unity. But the start of the year has been very complicated, I think, from a sentiment perspective, because you've had a kind of intermittent return of load shedding, for example. We had the potential VAT increase that's weighed on everyone's minds. The VAT increase still coming through, albeit lower, but still, I think, making consumers quite nervous. And you have South Africa's diplomatic situation with the US also adding to strain on consumers' minds. So unfortunately, we've started seeing this pull back, and I think the fear is that consumers will stop spending, and that will have a big impact on economic growth and a big impact on some of the consumer stocks listed on the JSE.
Yeah. So what's the latest story around Anglo American finding a buyer for its diamond business, De Beers? I know it's got an investment in Botswana there, because I hear that they're also open to the idea of actually listing De Beers. What do you think about that prospect? If they were to go ahead, would you suggest that that's a place to invest in, or you wouldn't touch it with a barge pole, given that people can't afford diamonds these days?
Well, so let me start with the first part of your question. We've heard through the grapevine and in news reports that Anglo is speaking to advisors about a potential listing of De Beers. I think they're struggling to find a buyer at this point. It's a very complicated asset at the moment. Diamond pricing is under quite a bit of pressure. And they've made a promise to their shareholders that they were going to divest from that business. So they need to find a way to do that. A listing is probably the cleanest way to do so. And I won't be surprised if they decide to go that route going forward. In terms of whether or not De Beers is investable, I think everything has a price. However, I am a little bit concerned about the long-term dynamics in the diamond market. Lab-grown diamonds, I think, have had the biggest impact because they are lower cost and have a lower kind of carbon footprint and are more friendly from a humanitarian perspective. So I think that those dynamics we need to get a grip on before we can really make an assessment on whether or not there's a long-term future for De Beers.
No, I appreciate those answers. Thank you so much, Chantel, for your time and your insights, as always. Chantel Marks, she's the head of equity research at FNB Wealth and Investments. With that, we're going to take a quick break.